Hey guys, today we are going to talk about a lot of things because over the last 24 hours, a lot has happened. We are going to talk about the Fed and about the conference that Jerome Powell had. We will discuss some technical factors that indicate that AMC is not being sold by retail at all. We are also going to talk about NYSE president coming out and finally admitting that the current price for meme stocks is manipulated and does not reflect what they should be worth. And we are going to talk about the new way by which hedge funds are increasingly manipulating AMC and GME stocks through buying pressure. Yes, they are not only involved in placing puts and printing naked shorts, but are actually engaging in a more nefarious tactic to suppress and attempt to delay the squeeze. What we are seeing is the entire system of the stock market slowly crumbling on itself. As such, expect some wrinkles to be added to your brain today. What do you say? Should we add some IQ points to that brain of yours? Great, let's do it. We are going to discuss many things, so buckle up, drop a like on the video if you find it useful, and let's dive right in. Prices of meme stocks, including GME and AMC, may be distorted because the majority of trades in those names are executed away from public exchanges where share price formation occurs. Stacey Cunningham, the president of Intercontinental Exchange, stated, and I quote, "In some of the meme stocks that we have seen, or stocks that have a high level of retail participation, the vast majority of order flow can trade off of exchanges, which is problematic. The price formation is not really reflective of what supply and demand is." It appears that Mrs. Cunningham is finally stating the obvious, the very thing we have been screaming at the top of our lungs for all these months now. This is one of the biggest issues that the market in general has. The availability for institutions to trade stocks in dark pools, for example, represents a problem because they can easily manipulate, or in our case, introduce unlimited amounts of naked shorts, by which they can get away so easily suppressing prices. There needs to be 100% transparency in all sectors of the stock market because without it, it leads to problems such as the ones we are facing right now. Furthermore, Gary Gensler, the chair of the SEC, said last week that there will be a broad review of stock market rules that will examine whether off-exchange trading, which accounts for around 50% of the market when institutional block trades are accounted for, distort the price discovery mechanism for stocks. Let's examine this for a moment, guys. This guy, who is the chair of the SEC, who you would assume has a vast amount of knowledge of how the markets work, wants to do a review because he wants to see if off-exchange trading, which accounts for around 50% of the market, distorts price discovery mechanisms. The obvious is a discovery for these clowns. What an absolute joke. No wonder why everything in the finance sector is such a joke. I was reading and only one person got it right. Playing stupid is how smart people use plausible deniability to weasel out of punishment for their crimes. Gary, Indiana, the event you somehow defy YouTube's algorithm and actually do find my channel and stumble across this video. Let me tell you that I did the math for you. After some insane math that was examined by all the mathematicians and PhDs of the world, we indeed came to the conclusion that 50% accounts for half of the trades, and if half of the trades happen in off-exchanges, then the system is due to manipulation. There, send me a paycheck and take the credit. Don't get me wrong. This is an incredibly bullish set of news. I am just baffled at how out of the loop and goofy some of these people are. Let's talk about Jerome Powell now. A lot can be derived from the statements he made, but I will simplify them for you. He made very optimistic remarks about the economy, negating the dubious assumptions that due to everything that happened with the virus last year will have significant changes to the economy overall. Interestingly enough, he said there are many powerful structural forces that will keep inflation in check, and because of this, the Fed should move cautiously in raising interest rates, rather than risk preventing the full economic recovery that is ongoing right now. Powell is optimistic, and that is super good to hear. What is of importance to you and me are the comments he provided in regards to inflation overall, and he made some very profound comments. When asked if there is a risk that inflation will be higher than we think, Jerome said yes. He expressed that if inflation exceeds 2%, it has an effect on customers by which they start expecting a continuation of an increase in inflation, which leads to more inflation. What he is referring to is the concept of a self-fulfilling prophecy. He stated that they aren't seeking inflation that substantially exceeds 2%, nor inflation that exceeds 2% for a prolonged period of time. Why does this matter for AMC and GME, you might ask? The reason why I discuss these things with you is because these things are important in how the overall market behaves. As manipulated as GME and AMC are, they still respond to varying degrees to the overall economy. As such, it is crucial to know the overall state of inflation as it does have effects on the volatility and price action we observe on our two favorite stocks. Now, let's quickly cover a couple of things before we start talking about the bigger subject at hand. The Fed submitted over $755 billion in reverse repo operations in the market. This is a very notable drastic increase over what we had seen. Banks being heavily leveraged as they are, this represents a dark premonition impending. They might kick and delay the inevitable, but this is not going to last forever. I remain super bullish as this only helps AMC and GME. I made a video where I break this down. Actually, I made two videos, one released this week and the other one a couple weeks ago. I will link one of the below in the description in the event you are interested in knowing how this affects the squeeze for AMC and GME. This week being big for AMC, so far Stonko Trader reports 488,746 option calls in the money so far. Whether this causes a gamma squeeze or not, I don't really mind. I am loving the price action so far and care about this to the extent that it increases the AMC floor a little more and more. In fact, I kind of want AMC to chill for a bit around the current price levels so I can keep buying more at this relatively cheap price. So, let's start talking big. This is why you are here for after all. Over the past couple of days, in particular yesterday, there was a lot of talk in regards to the website StockGrid. A lot of people looked at the digits on the position and started saying how the figure, now being over $22 billion, represented the total amount of short money to suppress AMC. People started running this idea like crazy, and many even started messaging me as to why I wasn't talking about it, going as far as calling me a shill. Well, I discovered something interesting, and to be fair, I wasn't even the only one. This negative value was assumed to be the total amount of negative pressure suppressing AMC, but this is factually incorrect. First of all, nobody can really tell the total amount of negative pressure on AMC because you would need to have a figure on the amount of naked shorts being printed daily and the total amount at a given time. You would also need to account for ETFs and entire indexes that are manipulated in order to suppress it, and the data compiled on the website does not account for that, making this assumption incredibly ridiculous to begin with. However, that doesn't mean this website is obsolete in value. Looking at the cumulative volume and the formula by which it is derived, one thing can be assessed. The negative figure of $22 billion might actually be a portion of the buying volume, not short volume. Deriving from the formula, one can deduce that market makers are actually rerouting the buying pressure that AMC gets into dark pools where they are able to prevent the pressure from raising the stock price. In fact, going by what is on the website, as another ape confirmed to me which I didn't catch, they are even going as far as purposely directing sells into the market itself, to cause more downward pressure. Now, this is obviously not for all shares, but to a significant portion. This brings about a new way found by which hedge funds are manipulating the prices of both AMC and GME. If all those millions and millions of stocks were allowed to circulate through regulated markets, the price of AMC and GME would be substantially higher. This is a very interesting discovery that one should keep notes of. These figures are very important in understand the entire puzzle we are trying to put together. So, someone sent me an interesting link that contained NYSE Filing. The New York Stock Exchange seems to be lowering some of its fees and increasing the credit they give brokers who route retail trades. We just recently talked about how much of the volume that occurs, in particular to AMC and GME, goes through dark pools, or what is an unregulated market. The NYSE obviously is trying to fight against this by upping their competitive advantage and lowering the costs and enticing brokers to use them instead. The very filing even reads that the proposed changes respond to the current competitive environment where order flow providers have a choice of where to direct retail orders by offering further incentives. The filing is very clear and direct. I believe the dark pool situation is getting so out of hand that regulated exchanges are being forced to up their game, which will once again represent another huge challenge for hedge funds and market makers suppressing GME and AMC. This segment works in perfect conjunction to what the SEC chair said earlier. I am super happy about this filing. It represents a pushback from the regulated market against the subliminal and ever-growing parasitic dark pools that aim to destroy entire markets and subsequently, worldwide economies. I once again take a fat L, because I haven't finished my magnum opus for ETFs. It is taking me a while to do this DD because it is so much info. I will probably not present my piece tomorrow either. It will most likely be on Sunday's video for sure. As for right now, I want to cut the video as this is all the reliable information I can disclose so far. Let's talk about technical analysis and finish the video. Before that, however, let me disclose that I am no financial analyst or advisor. We began the trading day moving very aggressively upwards. We reached 63 before noon today. The stock stabilized and built some support at 59 where it consolidated for around an hour before starting to retest the resistance walls. At around 1 p.m., AMC started moving upwards again, eventually reaching 63.81 as the peak price. It actually touched this price twice today. But on the second time, it actually was dipped to the VWAP line where it bounced up again and closed at 60.73. The stock ended above the VWAP line and is headed into tomorrow very bullishly. Tomorrow will decide how many in the money options AMC will have, so it will be a huge day. I will not even attempt to range where the price might go because I know hedge funds might be a little more aggressive. GameStop had a pretty bullish run up from the moment the market opened, reaching $233.66 before noon. It was amazing to see the stock move up and rebound up after it has been stagnated and moving downwards for so many days. GME then had a dip where it fell down to 223 and continued to trade in a channel back and forth between 224 and 226 for most of the day. The stock was below the VWAP line and was kept there intentionally in my opinion. As such, the stock closed at 223.59 today. It might not have had the performance AMC had today, but that doesn't detract from it being a dormant powerhouse that will initiate the short squeeze. I find its current price to be very appealing and attractive and plan on buying a ton of these shares once my wife's boyfriend pays me back, if that ever happens. But in all seriousness, this is a great price to buy GME at, and if you can grab some shares, I don't think you will regret it. And that concludes this video. I hope that much of what we discussed was helpful to you. We unraveled a key piece of how hedge funds are manipulating the stock price, which should be helpful for all apes and understand what is going on. Let me know in the comments what is your current biggest concern in regards to the investigation that the SEC plans to make. Do you think they will be assertive and change things for the better, or do you think it will change nothing? Let me know, and also, tell me if what I discussed in this video is helpful to you. I want to know how you feel about this information that was relayed to you today. With that, I hope you have a great rest of your day and I will see you tomorrow, so peace out.